G'day everyone, it's Angelo Remora here. I'm your favorite Australian and the real estate dingo, bringing you another vlog. And today we're talking about the top 3 exit strategies that you need to have when investing in real estate. So let's get it started. So before we get started, guys, I want to reiterate something that I've said many times before, okay? So if you've heard it before, you're gonna have to hear it again. And for those of you that have heard it multiple times before, you're gonna have to hear it again. And I'm just gonna reiterate it one more time. Is that cool? Can I? Well, I don't care, I'm gonna reiterate it. So listen, so guys, you make money when you buy and not when you sell, okay? Never forget that. Now, rephrasing that a little bit, you need to have an exit strategy in mind before you actually buy the property. And if you do not have multiple exit strategies in mind before you purchase the property, you can get yourself into a bit of a pickle. And this is what I mean by that. Time is money. So if you are holding on to an asset and you are cash strapped because all of your capital is in that asset, you might not hypothetically be losing money right there and then on the spot, but you are losing opportunity cost. So you don't want to be sitting on the sidelines doing nothing. I mean, guys, jump in there, you know? Let's hit a few home runs with the weird sport that Americans play, you know, the baseball thingy. We got cricket. It's a much better sport. All right, I'm not going to talk about sports here. Listen, the first exit strategy that you have to have is the property that you are buying has to fit a homeowner criteria. So make sure that you conduct due diligence on that particular area. Make sure that there is high homeowner activity in that area. Make sure that properties are selling at a pretty quick pace. Make sure that you renovate this particular property to the same standard as the comparable sales and price it a little bit below to be able to get that quick sale, okay? So that's the first exit strategy that you need to have in mind when you are looking at doing your first deal, your 10th deal, or your 100th deal. I still to this day have the same exit strategies in mind, and I've done over 450 deals, okay? That should speak volumes to you. The second exit strategy, guys, that you need to have in mind is this. Can you sell it to an investor, right? So then you're probably thinking to yourself, Dingo, how can I find an area where I can sell it to a homeowner and sell it to an investor at the same time? Hello? Oh, that was cool. It came back. Hello, guys. There are areas that are 50% investor owned, 50% owner occupied. There are areas that have infrastructure that supports an investor demand and it supports an homeowner demand. They're everywhere. Here in Ohio, I feel like a kid in a candy store. I can't stop. Like literally, there are so many areas out there where you can actually buy a property and sell it to a homeowner or sell it to an investor. Now keep this in mind. When you are selling a property to an investor, the numbers need to make sense. Investors base their decision on the numbers in the deal and not emotions like a homeowner does. So make sure you are delivering that property at a good cap rate. It should most likely be tenanted and it has to have good property management in place, because if I'm an investor and I'm buying a product, anyone can sell product all day long, but the hard part comes down to when you need to manage this investment property, right? So when you're selling or when you're looking at having an exit strategy, have property management lined up, reputable, legitimate property management, and you could potentially, sell that property to an investor if the homeowner aspect of it does not work out. And guys, last but not least, you couldn't sell it to a homeowner. You couldn't sell it to an investor. What the hell are you doing wrong, right? You should ask yourself that question. But now you need to refinance. So is your financing in check? Can you get a loan? Can you refinance out of that property? I'm not too worried about that. There is a lot of money out there. Everyone's throwing money nowadays. It's ridiculous. It's reminding me of the global financial crisis again. So be careful with that. But what needs to make sense is the numbers in that deal need to make sense from a refinance type standpoint. So when you refinance, you need to make sure that your monthly rent is covering all of your expenses. Here's a tip. Underestimate your income and overestimate your expenses when you're doing your deal projections. If those make sense, then you should be able to refinance that particular purchase. But you have to make sure that you've got all of these things in order before you actually go into a deal. And guys, the fourth one is, there is no fourth one. You're screwed. I don't know what else to tell you. If you can't sell it to a homeowner, if you can't sell it to an investor, if you can't refinance it, why are you even buying properties? Like, get your together, right, before you actually buy your first deal. So that's pretty much it. I hope you enjoyed this vlog. Hey, any questions, any comments, any critique, if you want to hear other topics from me, please comment below. I'm going to be in those comment sections. I'm very active in those comment sections below. I'm happy to help in any way. I'm Angelo Remora. I'm your favorite Australian and the real estate dingo. I'll catch up with you guys in the next vlog.